All right, guys, I'm gonna get started here. So I'm starting right now, Shar. So yeah, I haven't started yet. I was waiting on a few more. Um, all right, guys. So I'm gonna start off with a little, just a quick little thing showing you how I go into. Not sure if you guys follow my YouTube or not, but I posted a video a couple days ago, and there's another video on there about how I go about getting my daily bias every single day. Or because if you look back on the charts, we know that daily highs and daily lows are big liquidity pools, right? And we know the algorithm, we know the market. Oh no! Thanks for telling me that. That's a good call. How about now? Is that better? I gotta make. Oh, good. Well, now it got rid of the chat, so I can't see chat. All right, guys. I am not a Zoom expert here. Uh, there's there's chat. Okay. ICT course. There we go. All right. Now you guys can see. So basically, so every day, so we know the market seeks liquidity, right? It targets swing highs and swing lows because why? Well, because that's where everyone places their stop loss orders, and what does the market want to do? It wants to sweep those orders and get that money in, into the market. The algorithm's job is to stop people out. Well, where do you think most people, or at least bigger money players, put put their stop losses? They play on the higher time frame, right? The daily chart, the weekly chart, maybe some even on a monthly chart. Well, so we know daily highs and daily lows are big spots. So anybody that longed anytime during this day thinks, okay, this is a big spot because we had a big up candle here. This low should hold. So their stops go to this daily low, and at some point this daily low probably gets ran. So every and then if you look back, like, yeah, we have inside days every now and then, right? But some days, I mean, most days, we either take a previous day low or we take a previous day high. So this is a little thing that I kind of discovered. Another people have kind of caught on to it too, but it's just a little trick, and it can kind of give you like an idea of at least one target to go to into every single day. So even if you guys are like in options or in calls or puts, like you can maybe hold some puts to low to like to like a previous day low here, or if we're bullish that day, it's more than likely that we should go take out the previous day high. So what I look for is, okay, this isn't 100% like it doesn't work every single day. I would say it works 8 to 9 times out of 10. Well, let's go with 8.5. So what I'm looking for is, if we have like an up candle like this, if the next day, so this candle closes back as a down, if it closes as a down candle back inside the range of this candle, the next day we expect this low to get ran, and then you see it gets ran, right? So, and then the next day we expect, so coming into, so like after I see this daily close, like after the close, the next day I'm already assuming we're going to be bearish at least to this previous day low, just based on it closing back inside the range of this up candle, right? You see we take that low, and then this candle, this next up candle does not close. uh Sorry guys, I'm trying to watch the kid too. So the next day, this up candle does not close back inside the range of this down candle. So we do not expect, this high to get swept. This is kind of like a 50-50. We don't close back inside. So we don't expect. I'm sorry, I should point out that we don't expect this high to get ran, right? So, and then you see, since we didn't close back up inside of here, we run this one. The market was not strong enough, showing strength to close even back inside the range of this. That so we end up taking the low, right? And then this is a case of it not working. Um, right here, you see this candle closes back above the range here. You see we just kind of we end up taking the low. We might have taken the low first because we expected this low to get ran. Um, but so since this candle closed above, the next day we would expect this high to run this high. You see, it didn't, right? Like I said, 8 out of 9 times, 8 out of 10 times or so, it works. So this is back in February, so I'm just gonna play like 20, 30 candles here and see if we can kind of predict uh, what the next day happens, what higher or a low gets swept. So since it just kind of gets you in the have into the habit of like what you're actually looking at. So since this down candle closed back below the range and back inside the range, of this candle, we expect the next day you would expect this low right here to get ran. You see, we end up running that low. You could have cut your puts there because why? I mean, you're in a daily FEG and you sweep a daily low. It's like a lot of times when people are in chat and they're holding puts and puts and puts, or calls and calls, and we take a daily high or a daily low. It's a fantastic spot to cut or at least get a big trim in, because when the market takes a higher time frame liquidity like this, there's a very good chance that the market's going to reverse, right? So looking at this, you see we take that low, we go up, we take all these daily highs. What would you expect next? This candle closes back above. We would expect this high to get ran next, right? You see, we run that high. We close above this candle, closes above the range of this candle. The next day, we would expect this high to get ran. You see, we run it barely. We run the high here. So going into the next day, what are we thinking? We're thinking we should at least run this low, right? We end up running that low. We close way below it the next day. What? We should run this low. But you see, we get an inside day. Closes back above. Obviously, you gotta be aware of your news and what days can be choppy and whatnot too, right? But so we close back inside. Then you see a close back inside the down candle. We take out this high. So instead of confusing with all of these lines, I'm just going to stick to a 1. So you see we get close to this high, right? But don't take it. So this candle closes above here. We take that high, and look what happens. We sweep all this liquidity. Everybody that was short here. So when we take both sides, we'll see if we get a instance like that. So basically, it's just hard. You have to just look at the the higher, either go to a higher time frame and look at it, or basically you just got to look at like the past candles and see where we are on the chart. Are we looking like a pullback, and where did the candle close? Like was it a green close? Was it a red close? That's actually a good point. So we'll look at that once I finish up here. So you see we close back below the range. We would then expect that low, and then we close back below. You see we don't get it. Why? Because we end up sweeping all these lows. And what I say about we sweep a daily low, we then look for reversals, and then just so on and so on. You see close back above, takes the high. So like I said, it's not completely 100%, but it always gives you a good idea, at least going into the next day. It gives you at least one good price level to a target going into every single day. So I just wanted to show you guys that. Hope you guys can take something from that. So like today, it's tough, right? Because what did we do today? We swept one daily low, 2 daily lows, 3 daily lows here, right? So, and you see we kind of wicked off of it. We have a daily order block and stuff here. We're back in this daily in this daily FEG. It's really just, it's more of a toss up, and you just need to see where we are, right? So we swept all time highs again. It's possible we go on and take more, but since we swept, like here, I would guess we get some kind of relief balance. And then this is where we go to this is like we go to like an hourly or a 4-hour chart, and we see, oh, we have an hourly FEG up here. Maybe we get some kind of move up into here, and then and then lower. So um, that's just the first thing that I wanted to show you guys tonight. Other than that, is there any questions on that before I kind of go on to the next thing? And if you also, if you look at it, you can kind of I haven't back tested it a whole bunch, but you can kind of use it on like the hourly time frame too. So I've really wanted to like look at this as maybe like an entry model for like entering calls, puts, longs, shorts, whatever. Like like here, like I'll really close above. Does that mean I can now go long? But obviously there's no wick here, so there's no really good place to target. But it just that's something else I'm looking at for the future that I'm still back testing here. But um, other than that, so I'm gonna go into so like good intraday targets, right? So when we're looking for liquidity to in the marketplace, and like where do we think the market can go? I've always been taught by ICT that you want to look for you want to look at the knife as like you want to look at the knife. You want to look at the market as a knife. You always want to target the smooth areas and not the serrated and not the serrated side. Why? Well, because the serrated side is going to be the area where like all the damage is done already, right? The market has already stabbed like the market stabbed lows down here, right? If it's stabbed here and there's wicks up, it's already taken out the liquidity down here. You see it kind of hit this FVG. The market's already stabbed this liquidity, so now it's time to go back up where you have more smoother highs, right? More smoother highs up here. And that's where the market wants to go. Kind of like here we have all these smooth highs. Market does a bunch of damage down here, and then where's it gonna go next? Once the damage is done, it has to go back up and take liquidity to the other side. Kind of like the kind of like our daily chart right now, right? Like today we once we swept all-time highs, we have these smooth highs up here. Now all the damage is done up here. It's time that it's like today we had these smooth lows down here, right? These relative equal lows. That's why I'm always targeting equal lows, equal highs, because they're smooth. What do I mean? Why does that attract price though, right? Because retail traders or anybody, I mean, to be perfectly honest, like when I was starting out, what am I looking at? I'm seeing this and I'm like, oh, price could not get above this. This is resistance. Price should not go above here. So what's price going to do? It's going to stab lower. And what's the algorithm programmed to do? The algorithm is programmed to go and what stop you out. So where your smooth lows are where people see resistance and support, and that's where the market's going to a target because it knows because it knows that's where your stop losses are. So serrated side is where the damage is done. You want to then attack the smooth side, right? So, kind of like this morning, right? Damage done up here, big, a bunch of nice equal lows down here. Where's the market go? Right back down here. So that's just something else for like intraday targets. I really like to stick to like the 5 and the 15-minute chart for looking for like targets during the day and that nature. Like it's like especially like when coming into the morning sessions, uh, like uh, like today, right? We come in and this is Asia last night, and I see all these smooth. These are London highs in here. This is Asia high, and look, Asia highs did not get swept by London highs, so everyone that traded overnight, they all went to bed. Their stop losses are here. They're all short. The market comes back up and then sweeps them right after the damage is done down there. So that's just another thing I wanted to show you guys. Any questions there? Hope I'm not boring you guys to death. Um, so I'll go into LR into LR. So LR is essentially what most people would just say a trend line, a bull flag. It's just the ICT term basically for it. But it stands for, in the ICT world, it stands for low resistance liquidity run. So basically, You have one like, I guess here would be a good example. It's kind of like a trend line, whatever you want to call it. But does anybody know why these are like liquidity pools and why these work so well, and like why a bull flag would work, or a trend line gets ran? So when I look at trend lines, I believe that trend lines were made to be broke, right? So why these work so well? I don't care if you call it a bull flag. I don't care what you call it. They work great. I trade the breakout of them. I don't trade like I'm not shorting here, but that's why it works though, because retail traders see this and they're like, oh, short, oh, short. What? So what are they doing? Their stops are going here. Their stops are going here. Their stops are going here, and their stops are going here. Right? They see all these things and they're like, oh, price keeps rejecting this trend line. So what happens when price ends up running it, whether here or here? What happens? It takes so when it takes this high, all those stops, all that money gets pushed into the market. What's that do to the price? It pushes price up. So it essentially turns into like a domino effect. 1 second, guys. Um, so it basically turns into like a domino effect, right? So you have stop loss. Oh, all those orders get into the market. Boom. All those orders push this, pushes price up to here. Boom. Does it again. Boom. Boom. The highs get ran. So whenever I see like price building up like that, let's see if we can find a better example here on like like a 5 minute, maybe even today. Uh, so this looks kind of clean too here from looks like overnight session. So you see like here, like whenever whenever you want to see shorts, the big thing is you want to see displacement down. You don't want to see price just lollygagging here. You want to see like kind of like up here. You want to see uh you want to see strong down candles. You don't want to see this stuff. Why? Because look what's going to happen. This stuff gets ran because people are setting their stops here, and then the domino effect hits, and then obviously we end up running. So it's essentially as good as LR and equal highs to me are essentially the same thing in terms of drawing price to it, and like so whenever I see both, I tend not like if I see this going this way, I'm not looking for a shorts at all until this gets ran. If I see equal highs up here, I'm not shorting. If I see equal lows down here, I'm not longing, right? Even though 1 second, guys. Sorry, guys, the little one's absolutely screaming. So, but essentially, you don't want to long when you see this. LRLR also works to the downside, right? Like we have here, and then look, same thing, right? Everyone that's longing. Every time we touch that trend line, what are they doing? They're longing. Stops go there, and then we go back down. So that's LRLR. Other than that, is there any questions today, guys? That's really all that I wanted to cover. Nothing. Okay. I do want to go. I will go over one more thing. I know a lot of people have questions on SMTs. That there you go. Look at that, Dave. You've read my you've read my mind. So breakers. Okay. SMTs on the daily. Absolutely. So um, SMT stands for Smart Money Technique. SMT is essentially when NQ, ES, SPY, or Q take the take take a low or take a high while the other one doesn't. That shows us potential strength or weakness. So I found a good example from today. This was the afternoon where we got the little reversal. You'll see ES took this low. It swept this liquidity, right? But NQ was strong enough to where it didn't want to take this low. If NQ takes this low, it's probably telling us that the price wants to then move lower, and there's a liquidity target below, and we need to we need to look left and see what else is below. So you see today, if you ever see this signature, that's why I think it's so important. You must watch SPY and Q or ES and NQ together. You always got to have like I always have both brought up on my chart so I don't miss an SMT, because if there's a time when you're long, okay, let's say short, because this is a bullish SMT, right? You have a bullish SMT on the lows, bullish because NQ is showing strength here, and this means this is where you can get some kind of reversal, right? We so another thing with SMTs, a lot of people think you must get a reversal after an SMT. Well, you don't always have to. We just use them for extra confidence. So basically, if we have an SMT here and NQ is showing us a long setup, we know, because why? If we know we're going after liquidity, we want some, if we know we're going for a low and we don't take this low, what's going to happen? It's most likely going to come back and take this low first. We don't want to long before taking a low, right? Because we know the market's coming, it's coming down for a low. We don't want to long until that happens, right? Because it's, if we buy up here in the market, and we know the market's coming down here, we don't want to long yet, right? We want to wait until this, like this low swept, for example. But if the other index does it while this one doesn't, we are in the clear to then take a long position here if a long opportunity, like, presents itself, right? So in this case, I guess we had this 1 minute inverse. You see, we kind of closed, we closed above it, and then we took off. If ES didn't take this low too and was like this, that's it. With then what do we have? We have relatively equal lows, and then the market's most likely going to come back down, stab down, and then we get the long setup. So that's just like a 1 minute chart example. So I will show you on the daily. They mean even more, especially right now, because I will show you the thing that's going on right now. So look at NQ right now on the daily. If I can get there, all-time highs, right? Swept all-time highs, ES, NQ. So there is no bearish SMT here, right? Both swept the highs. So if both sweep it, we expect to go higher, right? Well, we have a redheaded stepchild in YM that has yet to take all-time highs yet, right? So we have this so when you're looking at them, it's important that you pay attention to the Dow Jones YM as well. As much as it sucks because not many people pay attention to YM or the Dow, but it's important because look what's going on here. If a YM would have taken all-time highs, it would have meant that, okay, the market, if there's no SMT, it usually means, like I said, we push higher. But since YM is failing to take all-time highs, it's showing bearishness. SMT is always based off of either or. So if what I just showed you was reversed, so if NQ doesn't take a low but ES does, or if NQ takes a low and ES doesn't, then it's still an SMT. I always think it's better to long. So for example, I think for most of you guys, if SPY, I don't have a chart with SPY and Q next to it, but if say SPY doesn't take a low, but NQ does, then you're still in the clear to then long SPY. And I recommend you a long SPY. It's always I'm glad you asked this, actually, because it's always better, in my opinion, to long the one that didn't take the low Why? Because that one is showing, more strength, right? Your odds are probably much better of that one, having a greater return than the one that took the low. Both are fine, but I just prefer to take the one, uh, that is the stronger one of the two, or the weaker one, depending on what kind of SMT you have. But yeah, so like right now, all time highs. Uh, we do have that bearish SMT because YM has not taken those highs. The other thing is we do have a bullish SMT here on these daily lows right now, with pretty much the same thing I just showed you, daily chart. Another thing, you always got to make sure it's the same time frame. Like, so like this is Friday, May 17th. Notice NQ has not taken this low, showing strength. Probably a lot of it because of NVIDIA, right? But and then ES has. So this could be another reason we get some kind of retracement tomorrow. That SMT, and then if NQ comes down and takes this low, it means we probably go a lot lower. And then we look left and we're like, oh, what do we see next that price could draw to? First thing that I see on the daily is this daily FEG that hasn't been tapped. So if we break this, and then if we go to YM, you see YM's taking that same low as well. So that's what I'll be watching tomorrow. If NQ takes this low, I'm probably targeting 18,400 down to this daily FEG. So uh, that's SMTs in a nutshell. A lot of people have a hard time with them. I completely understand, because you can have an SMT on the 30-second chart or on the weekly chart. So, but it's just always important. It's like a lot of times when I'm long NQ. So the big one is data highs, right? Whenever I'm targeting data highs and data lows, so a lot of times, I trade NQ obviously a lot more than ES, but a lot of times ES will get to data highs first. So since there's a bearish SMT there, NQ doesn't have to get to those data highs. I have no idea if it's going to or not. It's essentially gambling at that point. I will always take off. I will always take a big trim there. That's why I always watch both charts. If you're targeting a certain level, if one takes it and the other doesn't, I highly recommend a trim, because the SMT could absolutely we can always get some kind of reversal off of an SMT. So that's pretty much an SMT. I'll go over breaker blocks quick. Actually, breaker blocks are perfect. I'm not a big breaker block trader. Breaker blocks are essentially what most people refer to as resistance turned to support, support turned into resistance, right? So basically, a breaker block is going to be when you take a high, and then you okay, you take a high, you take a low here, and then you take another high, and then you close back below. This turns into your breaker block. So basically, prior resistance right here breaks out of it, closes back below. They're kind of complicated. Exactly why I don't trade them. I think just FVGs and highs and lows are all you need. But you see what happened today, right? We closed back below it. You have this hourly breaker block here. Price clawed up into it, and look where we rejected. You have hourly FVG here. You have, this was 50%, right? 50% up into the hourly FEG, into the hourly breaker, and then back down. So breaker blocks are just that. Like, this is another example right here. You see, you take a high, you take a low, you close back over this high. So this was your bullish breaker here today, and look how that supported price back up here, just enough to send it back up 50% into this other breaker, and then back down. Kind of hope that answers your question, GCCI. Like I said, I don't trade them too much, but essentially that's what they are. Let's see here. Other than that, guys, that's all I really want to show you guys tonight. This is another. Okay, I'll show you one more example in like a lower time frame. So here, takes a high, takes a low. This turns into your breaker. These two up candles, price supports it, and then pushes up higher. But there's also, there's also, I guess there's no FVG there. It's a bunch of order blocks, whatever. But you see like, and then that breaker holds and then pushes higher. Just think of it as prior resistance to support, and vice versa, and you'll basically know what a breaker is. So, um, other than that, guys, got anything for me? Zoom's about to kick me off because I don't have the premium. So, but yeah, resistance turns support. That's all it is. But all right, guys. Well, I appreciate you guys stopping by. I'm not sure if I'm doing any more classes for Rock. I think he's doing the last two, but appreciate you guys stopping by. Like I said, my DMs are always open if you have any questions at any time. ICT, FEG related. I'll always be happy to help. But with that, hope you guys have a great evening, and we'll catch you guys next time.